Hey everyone, quite an exciting panel ahead. My name is Marin, I'll be your moderator today. I'm a contributor to Lido DAO for almost 3 years now. But in my past life, I was actually a startup analyst, and my dream job was to do what these guys do. So I'm thrilled to change the industry and now to pick the brains of the smartest out there. So I'll let them to introduce.
I'm Nick. I lead go-to-market at Paradigm. Basically means I work with our portfolio companies on anything BD, strategy, growth related. And I think Paradigm is known with sort of a DeFi focus. So it's somewhere where we get in the weeds a lot in helping them scale their protocols.
And my name is Valentin. I created and I'm part of the Daedalus Angels Collective. We're 9 people that's been deploying capital in the last 4 years. We invested over $20 million across 100 projects. And I'm from an engineering background, so I used to be a builder before that. Now I'm mainly reading decks and doing research.
I'm Walt. I work at Cyberfund as an investor. Cyberfund is a big private investor in the space. Big meaning we've backed a lot of companies and been around forever. Just not super public, but working with companies like P2P, like Lido, like Neutron, and a bunch of others in the space. But yeah, based in New York, and we're global. Also very into DeFi.
So a lot of exposure from all sides, technical and non-technical in DeFi. But there's a lot of nuance around it, and apparently the most crippling to it currently are regulations, and they are limiting growth. So what would be your stance on it?
On regulation?
Not the regulation itself, but how do the regulations actually affect the growth of DeFi itself and the development of the, let's say, sub-industry? Because I like to separate DeFi from meme coins and regular crypto, you know.
I mean, one could argue it's not real DeFi if regulation can affect it. But I think you'd have to look at like where the lobbying dollars are being spent in Washington and to really understand what was going on there, which a lot of that stuff is obviously very closed door, very buttoned up. I think the front end is definitely like what's been historically capturable and kind of where people have focused efforts in terms of lobbying, but I don't think it's been super effective. I think, you know, just one of the benefits of DeFi is it's open, so it's really hard to do that stuff. I think the interesting stuff is kind of taking what traditionally you would rely on regulation for and getting it to integrate better with the network, so through like bespoke structures, or just figuring out a better way to put it on chain.
But you mentioned traditionally, are we just replicating TradFi? Or?
Definitely not, definitely not. I think just composability alone lets you do things that you can't do in TradFi. Very different like principal agent problems. There's definitely some like new problems in DeFi. Like there's like, you know, just like the vagueness of what you're buying, who created the asset, where the asset came from. Like that's super different. How things launch, go public, all those things are obviously very different. So I don't think we're replicating TradFi at all. I think we'll take like really great parts of TradFi, but some parts of TradFi we won't be able to take. I think like options have been like a very obvious thing where like the liquidity is just too fragmented among all the pools, so you really can't build anything interesting with options. So that's, you know, kind of stayed on Deribit and not Paradigm, but the other Paradigm. Like all the trading's still on there because of, you know, kind of this like liquidity, that fragmentation that you can't really fix on chain. So I think they're more broadly synergistic, and I think we'll increasingly see that.
In my opinion, people say that regulation is somehow, you know, strangling or making DeFi die in some sort. I don't agree with that. I think DeFi, to a large extent, regulators don't understand that they can't regulate it, they can't stop it. It's like decentralized finance. It's you know, it's the same like stopping Bitcoin. What they're doing is they're basically regulating the on and off ramps, which I think it's completely normal. And then the other part is during these last 4 years, DeFi has been in test, basically. Like, it's a fairly new thing, and I believe that institutions are understanding right now this is actually a system that they can start playing with. because they can't really start playing with something so new before all the kind of rough corners are kind of polished out. And we've seen so many hacks and so many problems, but now things are becoming more and more stable. So I think the path forward will be that we now have all these DeFi primitives, and they're going to be used more and more by institutions. And also, they're going to start using DeFi in a more centralized way. There's going to be permissioned tokens, securities, with all the KYC, everything that is coming together with them, which is completely fine. I think tokenizing real-world assets, it's a great thing to do, even though it will be highly regulated. Still, it's going to be much better than what we have right now in traditional finance. And I think TradFi is understanding it. The main benefit is the operational cost. So they're just going to come. There is no question about it. And on the point whether DeFi is just TradFi on the blockchain, I also don't agree with this statement, because there are specific DeFi things that don't understand in TradFi at all. And if I need to pick one example, that will be flash loans. I think flash loans are just something that we invented in DeFi, and it democratizes the way to do arbitrages on chain and to have more efficient system compared to what we have so far.
Yeah, I think it's a good point. I think on the regulation piece, there's more learning, there's more understanding coming from what the benefits of DeFi are and how they're actually achieving some of the policy outcomes that these regulators were focused on anyway. So I've been really encouraged to see the more people who work either in administrations or in more research and academic work are really using DeFi, trying DeFi, and seeing what sort of self-sovereign money and protocols can really do for things like consumer protection. On the piece about, are we just copying TradFi? I think you bring up a really good point with flash loans. And also just point out, some of the mechanisms in DeFi that we sort of use by analogy. Let's say, we call something a lending protocol. It's actually completely new, different, and novel than lending that we think about in traditional finance. For these lending protocols, they're essentially self-driving banks, as they were described by Brian Brooks of the OCC. They require a tiny, tiny fraction of the people that would be required to run a regular bank, and allows anyone to tap into an interest rate. So whether it's these self-driving banks, whether it's AMMs, whether it's flash loans, these underlying mechanisms, I think, are actually new and novel in and of themselves.
I mean, it's a perfect intro to the follow-up question that I wanted to ask. What are some additional angles that you see that we bring as a benefit to TradFi by utilizing DeFi?
Yeah, I think it's really cool. I think we've seen the impact that TradFi can have on DeFi. Liquidity coming on chain, more people in the space institutionalizing the sector. But I think what's also going to be cool is the ways that DeFi sort of eats its way into traditional finance. I think there's two things that I'm really excited about. Number one is just the ability for global financial institutions to have a shared ledger instead of using their own proprietary databases. It'll make things like settlement much cheaper. It'll make interoperability of assets between, like a JP Morgan and a Citi just happen seamlessly. And then, in the same way that, there's a famous post that, every company is going to be a fintech company because you can integrate things like embedded banking through banking as service providers. DeFi is just going to turn that up to 11. I think any fintech company has the ability to embed now, this whole slate of, functionality just out of the box, basically for free, which is what DeFi enables you to do. As long as you have an internet connection, you now have access to the world's, financial superhighway. So I think DeFi is going to eat sort of traditional finance, both from an interoperability perspective as well as, a product and roadmap perspective.
Yeah, and if I need to add something on top of this, because I completely agree, like it's going to be basically the financial rails, and it all comes down to reducing cost and reducing the spread. Just DeFi allows these companies to operate with less people and to have more efficient transactions, less middlemen. But then when it comes to retail, it's also is great because it gives access to services that otherwise are completely inaccessible to regular people. Like, for example, if you're a really wealthy person, let's say in the US, you probably have like a brokerage account, and the broker is going to give you like preferential rates. Maybe you get a credit line against your stock portfolio and all that. This is not accessible to regular retail people, while DeFi allows you to have all these services in your fingertips. Even though you're managing like, I don't know, $1,000, nobody's going to care about that. You have the same services as everybody else. And that was actually eye-opening for me, because I come from Bulgaria. Like, Bulgaria is like, nobody knows where Bulgaria is, right? So when I saw DeFi and when I saw all these things, I was like, oh my God, like now I'm playing together with the big boys. Like, this is amazing. Like, I want this. And I think the more down the road you go in the world with like countries with less and less developed banking system, the more people see the value in DeFi. So if you go in the US and ask somebody about DeFi, probably they're not going to understand it very well. But if you go to somewhere, I don't know, East Europe or Africa or whatever, and you ask people and explain to them, they'll be like, oh my God, I want this.
If you don't want to take it, we can. Yeah, sure.
For me, I think kind of backing off of Nick's point, and kind of what the world looks like in 5, 10 years. We've already kind of had the embedded fintech stuff. I think I was using my Fidelity account earlier this week for my Roth 401k, and it was like the worst experience ever. It was like, where is the button? Where do I even see my portfolio? Okay, I found where my portfolio is, and now I know what percent are in like these random indices, but it's not even telling me what's in the indices, and you have to click in, and it's like the worst product ever. And I think you kind of see this where like if something has a monopoly, if it's kind of embedded, it kind of stagnates a little bit, and not always, but I think especially with banking and kind of finance and stuff, like there's a lot of capture that's kind of happened. And I think the best thing about kind of crypto rails is because it's global, it's super, super competitive. So whatever rate you're getting, whatever trade you're executing on, like the rate's going to be really good eventually just because it's globally accessible. So you're crossing the most order flow, you're seeing the most lending liquidity, whatever it is. And I think, that kind of like global scale kind of opens the door for competition in a way that, a company like Fidelity hasn't faced like true competition, maybe ever, So I think for me, that's very exciting. I think we're just, I think it's easy to kind of look at today's DeFi and be like, it's not good enough or it hasn't kind of fulfilled its promise. I think that was kind of the impetus for the title of the talk. But to me, I think it's like, if you're doing this for 5 years, 10 years, it can, feel like nothing has changed that much. But then you're like, okay, where were we 5 years ago? Like, none of this existed. Where are we going to be in 5 or 10 years? Like, Fidelity is not going to be on chain. Like, Fidelity might not exist. No offense to the Johnson family that owns Fidelity, just as a point.
Interesting take. But if we observe in the trends what happened, obviously we have this improvement in UX, and I do agree with you. It's going to be a major one, even within a couple of years, not 5 years from now. But trends-wise, what do you see is the biggest and most impactful going on now, and how do you see it panning out?
Yeah, I think it's hard to kind of say like, I live in America, so it's hard to, I think compared to a lot of the world, like America has pretty good financial rails, and I was lucky enough to grow up in that. So I think the like second order effect though is going to be really interesting, where like places that don't have good capital markets or don't have good capital controls or don't have like a good currency to save in are going to start having private property rights, or at least like sovereignty over their wealth, basically through like Ethereum or through another network, and be able to access like the US capital market. Most people, who are born abroad really struggle to access it. It's super expensive. It takes a ton of paperwork. You might not even be able to access it. So I think the effect of those people kind of being able to like basically live in like a high savings economy, like a high trust economy. Like they can look to the future, they can save 10% of their wealth and build a business. That's super transformative. So I think it's like very incremental, and it doesn't sound like that extreme, but I think the effect is like profound. It's like globalization, but not like the World Economic Forum, like top down.
So if we talk about general trends in DeFi happening at the moment, like at least from the decks that I'm reviewing, if I want to summarize this, I would say that we're probably in the stage of optimization right now. So I'm not sure that I'm seeing that many kind of very new primitives coming along, but I see a lot of optimization happening. For example, optimization of lending markets, or optimization in a sense of unifying liquidity across different chains. And this is all about like the cross-chain abstraction and the intents and getting better execution of your orders, and also optimization of user experience, which is also very important. And to be fair, like EthCC and DEFCON, what I see a lot happening is exactly this optimization of the user experience, being able to onboard users without a seed phrase and without like all this confusing stuff that we see right now. So I kind of feel like we're at this stage. And then on the other side, we see kind of institutions coming in, like BlackRock launching their fund and all this. So this is like happening on the other side. So I don't think there's going to be DeFi summer as it happened in 2020. I don't think that's gonna happen. That was really wild and like the biggest explosion when it comes to DeFi. But we're gonna see like new stuff and like more liquidity. I think the thing we need to probably monitor as a one metric will be, I guess, TVL, and maybe more specifically how much stable coins are being put into the whole system. And if we see this going up, then we are on the right track.
Yep, yeah, I think it's a good point, particularly on the stablecoin piece. I think, when you talk about new trends, I think there's always, crypto sometimes gets knocked for having a short attention span. Everyone's looking for, some novel new mechanism that's just gonna like unlock the space. I think my take would be that, we already probably know what the killer apps for DeFi are gonna be. It's gonna be a handful of things like, staking, swapping, lending, derivatives. And I think what's really interesting is both on the optimization piece, but then also on the distribution piece. So the trend that I have my eye on for the future is, will stablecoins be the Trojan horse for DeFi, getting it embedded into all of these, traditional financial markets, which will then bring a wave of new capital, a wave of new eyeballs that will then refine it further. And if you just walk through a thought experiment from some of the recent announcements, let's look at USDG, this stablecoin consortium that was launched by folks like Kraken, Anchorage, and Robinhood. Robinhood moves a lot of money between traditional financial players, folks like Citadel or Jane Street, large trading firms. It'd probably be much more efficient for them to use stablecoins instead of traditional dollars. Once they're moving stablecoins, now you have all these other firms using the same token. They're going to need to buy wallet software. They're going to need to buy monitoring tools. And then once they're holding the stablecoin, they may be incentivized to become a potential issuer and join the consortium. They could just think, what's the highest leverage thing I could now do with this stablecoin? And that's probably participate in DeFi. So I think when we take a look at, what trends are exciting, I think my push would be, let's not just look at tweaking the mechanisms. Let's look at distributions and optimizations that will come from, this much broader market that I think we can now serve.
I feel you highlighted optimization severely multiple times. But so how does DeFi look in account abstraction future, in a chain abstraction future? We are currently facing the launch of multiple app chains. We have various stacks giving you ability to mint new chains basically overnight. Then you have rollups as a service, and it all creates liquidity fragmentation. So from the user perspective, how does DeFi look? And from a technical perspective later on, Valentin, if you can assist, how would it look under the hood when we go towards a account abstracted future for DeFi?
That's an interesting question. Something that we observe right now is when a new L1 or L2 happens, you're going to see like a bunch of forks of these existing DeFi protocols popping up immediately. If we manage to nail, and I think we will, the chain abstraction thing, I think that's going to change. Like it's going to be different, like in a sense that we are going to see less forks of existing stuff happening. It will be just so much easy to use the existing liquidity out there. So the market should adjust using that, because money always want to go where there is more liquidity, where the better deal. And they're gonna optimize and arbitrage all these kind of opportunities very quickly. So this kind of dynamic is gonna change for sure. Now, there is another point also when it comes to chain abstraction. I think I tend to distinguish two cases when it comes to chain abstraction. One is moving small amounts. And when you want to move small amount of money, you really don't care like how your order is being fulfilled. Like you don't care about what kind of security implications your order has and all that. But when it comes to big transactions, let's say you want to move like $1 million, then you become more cautious. It will be much more important like how exactly this intent that you want to do will be executed. So it will be interesting to see how this develops. Like how do you create this chain abstraction primitive so that it works both for retail usage, like buying a coffee, and rotating your capital in a fund? That would be like very, very interesting.
Yeah, I think my mantra would just be we need to kill network switching. Like any of that, things that a user would have to go through, they should be able. You should always count the number of clicks when you're interacting with the protocol in DeFi and think about how can I make this as smooth as possible. I think we have a glimpse into what chain abstraction looks like just by going back in the past, kind of before the roll-up centric roadmap. I used to work at Compound leading growth, and when there was only apps deployed on Ethereum mainnet, the number of clicks was quite a bit less. It was phenomenally expensive. So we definitely made some progress on the scalability side, probably a bit at the expense of the user experience. And so my hope is that with more tools like chain abstraction, we focus on how am I reducing the number of clicks for the end user, because there will be an amount of churn at each click. And so if we want to onboard the masses, we need to make sure it's just as easy as using a traditional financial product.
So my friend gave me this analogy, which is like a crab bucket. Like if you're a crab trying to get out of the crab bucket, like another crab will just pull you back in. And I think if you go back to like 2021, during this like fork kind of thing, I was actually working as a trader at the time, and if Aave launched on like a new L1, a new AVM L1, it would do really well. And it's because there'd be like a lot of recursive borrowing, and if it was an official fork, it would do really well because you were like, you trust it. If someone just forked it, they were going to add like a bunch of degenerate assets, and it was kind of just good for the network as a whole. That kind of like legitimacy though was very like flash in the pan, like you were the hot crab, and then you got pulled back in the bucket. I think right now we're at a place where like maybe 3-4 networks have kind of like escaped this bucket. And what happens with chain abstraction that I think is really interesting, which you kind of saw, back in the Compound days, and you've seen since then with wrapped Bitcoin on ETH and the staked ETH that's on Solana, et cetera, is the crab bucket gets a lot bigger because now you can use, staked DAI, you can use USDC or one of these new stablecoins that bears yield as your payment token. So now you really have to compete on like the monetary fundamentals of your network. Which not that many have truly escaped the crab bucket and kind of exist in this. So while that sounds really bearish or really difficult if you're like kind of competing in that vertical, I think for the space generally it's really good because now there's like fewer coordination points for people, and kind of the sales pitch of any of the networks is a lot stronger because the liquidity will kind of all be consolidated. It'll be less volatile, and then it'll be a better like savings vehicle, and then more people will want to use that as money. So I think it's like a very like natural progression, and also like like a hat tip to like the free market, because the free market potentially with chain abstraction will solve like our constant desire to launch new chains.
Yeah, but still, like from the debt perspective, when they're deployed on mainnet, they lose a lot in terms of fees because fees goes to Ethereum. If they create a dApp chain, they start to capture value for themselves. Do you see it as an underlying thing damaging the DeFi?
I don't think it would take the fees from like the Compound. I think maybe the network loses out on some fees. I think more so you lose out on just like people having like a reserve balance of like 4, 5, 10 different networks to use the apps on those networks. Now you just need to hold maybe you have 3 things you hold or something like 10% of your portfolio is like kind of high beta, 20% is maybe the network you really believe in, and then maybe 70% is in stablecoins. But I think there will be still some fees. I think just like pushing the nth node on your validator to be like the n being really, really high, so you have a lot of validators, but also making sure the issuance cost for the nth node to stay online is really, really low, so that if you have low fees, you can still offset the issuance and kind of get into that like psychological kind of loop.
Something that I think I can add here is that it's very interesting how DeFi and L2s are interacting between each other. And what happens is that DeFi brings MEV with it, right? So you now have this money that are staying there, and people are competing for them and collecting them. Now, when you have a universe of a lot of L2s, you again have the economic activity, you have the MEV, and there is a cross-chain MEV that you can capture. So the MEV is actually a centralization force for this universe of L2s, because if you control the sequencer of two L2s, then you'll be able atomically to extract the MEV out of these chains. So I think all this money that chains are making out of either MEV or just sequencing fees, they're also forcing them first not to decentralize, and then to even become even more centralized. So it's like the opposite. So it will be interesting how we manage to break this cycle, because I feel like the financial incentives are basically against us in this race. So it will be interesting to see whether L2s like Base, for example, adopt something like base sequencing. Like base sequencing, still something in research, but like what it's promising is that this MEV, this fees are not going to be kept by the sequencer, but going to go back to the network. And I think that would be a very interesting pivotal point if we actually go down this path, and it will be, I guess, great for the ecosystem. But it's a challenge that we have right now for sure.
Sorry, ultimately, would you label MEV as a good or bad?
I think MEV is basically a phenomena. It's like saying that, I don't know, rain is good or bad. I mean, it's just part of the climate. It's part of the...
What if it's acid rain?
Yeah. So everywhere where you have some kind of economic activity, where you have basic transactions carrying value, you're going to have MEV. And this also exists in traditional finance. Like if you are Robin Hood and you have an order flow of orders, you can extract MEV out of that, and I believe that they're actually doing it. So in that sense, I think MEV is inevitable when you have such kind of an order flow. The question is, how do you capture and manage this MEV? Because, I mean, when MEV happened, it almost destroyed Ethereum, if you remember that. That was 2021, because the block space was completely spammed. It was impossible to use the network. And then flashbots happened, and all kind of improved and all that. And then the oracles that are capturing MEV, so transaction auctions happen and all that kind of stuff. So now we see this MEV being pushed down to the users even. So I think it's just about just managing this MEV. It's not, we can't remove it, but we can manage it, and we can build systems that are managing it much better.
So one of the trends that's been rising up is AI, right? It kind of was always there when there was no narrative, speaking from TradTech perspective. But now we've seen a huge advancement and even a general population adoption of it. People use AI every day, from the smartphones up to chatting with them. How does it affect the future of DeFi?
Yeah, it's an interesting question. I mean, Vitalik had a good quote. I think it was at DuneCon a few days ago that, kind of the relationship he sees between crypto and AI is that, crypto sets the rules that AI will play in, and it's sort of a natural fit there. And that we've actually had this interaction since as long as, DeFi has been around. Trading bots that are, algorithmically placing trades. We'll probably see more advanced actors. We'll see, smaller number of, individual traders utilizing LLMs that are able to, do more sophisticated trades in the market. I think for protocols that want to leverage AI, helping your users go down specific paths, I think is what's most powerful. I think AI is most effective at an educator or a tutor because it can personalize a learning path based on where someone is exactly at. So the same benefits that, it'll probably get used in the classroom, it'll also get used in a product onboarding experience. You can imagine a lot of newbies to DeFi probably are churning out at one point or another of the process, whether it's setting up a wallet, making the first transaction, not adding enough gas. There's a number of ways that you can sort of screw up your first few times using DeFi. So I think I'm most excited for it to be, an onboarding mechanism for newbies, and then see what, these shadowy super coders are able to do on, maybe embedding it more deeply in the protocol.
Generally, I'm bearish when it comes to AI and crypto. I feel like, so a couple of points there. One is, with a lot of AI, it comes down to cost. So it basically comes down to how much it costs me. Somebody sends me a prompt, how much it's going to cost me to send him the reply from the LLM. And if you attach a blockchain to anything, it becomes more expensive usually. So I don't see the point in that. What I see is that DeFi and blockchain generally, it allows you to create markets for some kind of a resource. And one of the resources that AI needs is GPUs and computational power. So the only kind of synergy I see between like crypto and AI will be some kind of a marketplace for this computational power that is needed to run these LLMs. So that will be, I don't know, deep in computation, or like a marketplace for GPUs or something like that. This is what I see. Apart from that, I don't know, like I don't see any other like super exciting application when it comes to DeFi.
Sub-question. We can always tokenize it, right? And restake it and put it on Pendle.
And run a new chain for it, yeah.
Yes.
I think it kind of depends on what like level of AI you're talking about, because it has its entire infrastructure stack and it's still being built, and there's like just as many open questions in terms of what AI actually looks like. I think you have like your AGI truthers who are very loud, but I wouldn't say they're the vast majority of people. And then you have people who understand it's very transformative, and then I think you have some people who are maybe some doomers, but and then probably people who are kind of ignoring it. But I think like the granularity kind of determines how like synergistic they are. So I think on like a super high level, like we have Bitcoin miners now that are selling their excess energy to AI data centers. If they're not mining profitable during a structured period, they might lease it out. There's been huge like billion-dollar deals on this, but that's like a super abstract, far away. I think if you're looking at a DAO and you're like, can we put an agent on chain? It's like, well, we don't have agents to begin with. We don't have anything to emulate. We don't even know how to kind of like secure these against adversarial machine learning, or like someone creating, like someone could create like a proxy version of the agent, basically attack that in a sandbox, and then figure out how to attack the DAO. So you would need like extreme restrictions around the DAO. It would have to be like the agent has some controls, but only within like a hierarchy or like a multi-sig. So they're like controlled and have to report up to like actual humans in the loop. So I think like if you're talking about like very granular things like that, that's small. Like it would have to be super small because you'd have to fit on chain. It would have to have some form of decentralization. Maybe it's like chain link where you just have like you take like the average output for the agent. And it'd have to be like super low context because they don't keep context that long. So it wouldn't be necessarily that useful for like big decisions. Some DAO decisions are made by people who've been doing things for 5 years. So they have very specific reasons to vote yes or no on some proposal. So I think at like the highest abstraction, I think is already here. I think you're seeing like the blockchain networks interact with like energy grids, which are interacting with AI directly. And I think companies like that will do both and do it really well. I think getting to the lower granularity is going to take longer. And I think that's just like true. And the deeper we go, the less powerful it'll be for a while. And that's kind of like where we're at. Where we're at right now, I think we're almost to the point of getting some interesting data on chain. I definitely agree the interface stuff is already here. You've seen it kind of like change how meme coins trade. You've also seen it. People just build like new interfaces, which also changes the market structure of how people trade. Like if you have AI data on how people are trading, like people are going to trade differently. So I think there's lots to say, more to say, but yeah, it's very exciting.
So, I mean, you actually touched into one of my favorite topics because governance does touch DeFi, right? And a lot of protocols are actually DAO governed. So from this perspective, in theory, is there a chance that agents can be implemented to replace very specific, as you quoted, experts to execute smart contract activity rather than having risk on people participating in DAO activities?
I'd be pretty shocked if we get there in the next 3 years. I think if you did something like Chainlink, that makes a lot more sense, like where you're not, it's like external to the network. It's really like an oracle that's like taking like the chat input and supplying to the DAO in some way where there's like some crypto economic security behind it. In terms of like emulating an agent and putting them on chain, like I don't think we have agents in the real world. I think those are very far away. In emulating a specific person's role at the DAO, providing them all that context, and having it on chain. Like a lot of jobs, right, have like information that's publicly available, information that's proprietary, and to give the AI all the information, it naturally kind of open source it. So then like their decision would be like kind of harvestable for like, you know, competing companies or competing DAOs. So I just kind of find it like super unlikely for a long time, unless you figure out how to like put privacy around it. But then people are still going to try and break the privacy. So it feels very far away.
I think there might be some solutions to what you describe using ZK proofs, like generating basically a ZK proof for a given AOM that it's actually giving the correct answer and hide some of the inputs. But still, I see AI as basically a productivity tool, something that makes an expert 10 times more efficient. So in that perspective, it's kind of hard for me, like unless it comes down to a task that is like highly automatable or like something that you really want to automate so that people don't think about it too much, then maybe it makes sense. But I really think that, like, especially in these expert fields, you know, you always pair the AI with a human that is going to make him like 10 times more productive. You know, it's in software engineering, in risk management, and all that kind of stuff. Like, I kind of feel like it's like this. I mean, you can have oracles that are going to give you like answers for AOM for certain stuff, but I'm just trying to build a thesis how exactly, like what will be the purpose of that. It's kind of very, very, very fancy. I don't know.
Yeah, I think I'd agree with that, especially on pairing with a human. I think in the context of DeFi and DAOs, there's too much at stake for you know, an AI agent to really control the outputs, but it'd be great as an input that then, you know, there's some level of human review that goes into it. I think where you'll see AI actually directly manage the output is something like agentic finance, where, you know, you want to give an AI agent, let's say it's like a wallet with custody over USDC, and you want them to go out and run experiments, the ability to go purchase, you know, information sets globally, which are just too expensive to do and too cumbersome to do with traditional payment methods. I think that's one area where you'll see it. And then just more broadly, I think the adoption of crypto and AI will depend on how global regulatory bodies start to view AI, start to view training. You know, in some of the, you know, most succinct way you can describe crypto is unstoppable private money, because governments have a very firm, you know, grip and control on monetary flows. You could see those same rules, regulations, and clampdowns happen on information and training. And, you know, there may be a role for crypto and AI on, you know, unstoppable private training and learning.
So, I mean, appreciate all the inputs. My key takeaway of this is there's job security, obviously. No AI will replace us. But
just your job. Everyone else is good.
Fair. But it's kind of feels like we reached the part, as Nick said, where everything is already developed and usable for DeFi itself. Now we need to optimize. But to wrap up on that, I would ask you personally, obviously, each one of you, what's the next thing that excites you the most in DeFi? What are you personally looking forward to?
I'm very excited about restaking, which obviously has been around, you know, for a couple of years now, but just as a coordination mechanism and lowering the barrier to innovation, experimentation, Rather than having to go out, raise a whole economic security model, you can borrow it in the early days, I think will really just open the design space for, we obviously know there's middleware like data availability, oracles, bridges that, are a natural fit, but for what it opens up in the future, I think, we'll continue to see over the next few years.
I think that's a very good one. Risk-taking is definitely like a great thing. It's like a whiteboard that people are just starting to draw on, and it's going to come like amazing stuff out of it. I think a lot of protocols can leverage that and be much better using risk-taking compared to launching their own token. What I can add on top of this is potentially having a true decentralized Bitcoin bridge. I think this could be very, very interesting. Like right now, we are lacking this at the moment. We have like options that are not like ideal. So having a true decentralized bridge, I mean, like jokingly speaking, like it will be the bridge that North Korea uses. That would be like amazing for DeFi. Like I think this is going to unlock a lot of liquidity, like a lot of capital that otherwise it's not moving to DeFi.
I think two really quick ones. Chain abstraction for sure, just kind of similar idea to what he was saying. But I would say the second one would be see if we can get better prices than TradFi. I think like payment for order flow, replace like a traditional structure that had been around, 100 years, maybe longer. I don't know when exactly the security stuff shifted, but I think it did a lot of great things. I want to see if we could do something better. I think, whether it's like collaborative block building or something of that venue of taking like global prices and crossing up like global order flow, and then letting like multiple people participate in the auction and win the auction for order flow because they can purchase it from each other because they have privacy. I think that's really interesting. I think, that's still a little bit of ways away, but it feels very, very close relative to like the payment for order flow. And I think if we do that, like that's hugely transformative. Like if we could have better prices than Robinhood on, Ethereum or an Ethereum rollup or something, like that'd be insane. So to me, that's very exciting.
Thank you. Can we get a round of applause, please, for our awesome speakers? Looking forward to the next one.